Welcome to What the Biz, where we talk about building successful businesses, balancing life, and all the WTB in between. With your hosts, me, Richard Pyatt.
I'm Brigitte Vector.
And I'm Dan Prochko.
Thanks for joining us for another WTB, What the Biz. I'm Richard, Dan's here, and Brigitte is here too. How's everybody?
Hi, I'm here. Hi.
Yeah, we made it.
Hello.
We're here.
We made it. We made it another episode. Yeah.
Yeah, Richard should start taking like attendance.
Feel like a teacher.
Yeah.
Put my glasses down on the end of my nose and check off the attendance list.
I'd be the one running in 5 minutes late every week. That's me. That's me.
I took that today. I took that honor. Didn't want it to always be you, Dan.
I mean, you got a good reason though. You did like a half day workshop with a client or whatever today. That sounds. Ooh.
It was an intense day. I started at 8 a.m. I had them on the schedule from 8 a.m. to 11 today. New client. Knew that we were going to have some previous bookkeeper nightmare to clean up, but I didn't know what I was getting into until obviously we looked at it today and we got on a roll. So we power sessioned through, and what was that? 7 hours? Yeah.
It went well beyond 11.
Yeah, from 8 until 5 minutes after we started recording.
Yeah,
so, yeah.
I sent a text as I'm like rolling in my driveway. I'll be right on.
Well, that means you got a lot done, though, right? You just said, let's just slog through this right now.
We did, and actually, they feel so much better. Like the year is cleaned up. They actually know where their business stands. We walk through financial reports, and they have a clear picture now. So it's
nice. You could
see the stress kind of leave of like, oh my gosh, our numbers actually mean something to us now, and we know what we're doing.
I think that's simpatico. There was some timing involved in your doing that because our subject today is practical applications for financial reports. So you just lived it.
I did. My brain might be a little bit mushy, but we're going to make it.
All right. You won't hear me say another word till the end. Kidding.
Those long day workshops or like projects, they're draining. They can totally be draining. Just had a 2-day workshop with my brother, actually, who's a client. And we just did, I was explaining a bit earlier, but 2-day branding workshop. So we just went through and redid his entire brand. It's funny because it's like creative, just like words. It's words on paper. Mm-hmm. It really is amazing how much brain power it takes to think about, who we are, who we serve, and like what that means, and say it in a way that's super clear. So, man, each day we were like, it's like 4:00. We finished and we're both like, can we just take a nap?
Yeah.
Yeah, I think a nap. It's either that or we're going to the bar because I'm either passing out or I need a second wind. It's one or the other.
Admittedly, I thought about the bar first, but the nap makes a lot of sense.
We opted for the bar both days. So
there you go.
Solid.
So let me just say something about what you just talked about. So I understand what you mean. First of all, very much the situation of the forest and the trees applies in this conversation, because if you're in it in your business, you may not see it clearly in terms of how to present it. And here's an example of what I'm talking about. I'm in that business to some extent, and Dan and Brigitte and I were on a call. I think the last time we recorded this, and then we ended, and then we were chatting afterward, and Dan threw out some words related to how he perceived my business. And I scrambled for my pen and my trusty notebook, and I wrote them down, and I have now been using those.
That's awesome.
In other forums where people are asking me about the business. And one of the words you used, I used it today in a group setting, and somebody who knows my business, who is a client of mine, turned to me and said, "This is why it's important to change your description from time to time, because now I thought of somebody else whom you might want to reach based on the words you used. So it is really interesting. Sometimes we just don't know how to say it. You need somebody else to look at it and help you with that, which is what you're doing for your brother. And then change it up occasionally when you're describing it, because people, a certain word resonates with them.
Yeah, that's awesome. I mean, my bill is going to be in the mail. I hope to see a commission pretty soon. But that's awesome. That's awesome. Like, I mean, that's the whole point of it. It's like, at least in branding lines. I know that's not what we're talking about today. And I have this awesome segue in my head around Forest for the Trees and branding and how it goes to bookkeeping. But anyway, I'm just going to ignore all of that. But that's awesome that it spurred in somebody else's mind. Like, now I'm thinking of somebody else I need to. That's perfect. It's great. I'm so happy. That happened.
Yeah.
That's awesome.
Thank you for that. And I'm sure this kind of a subject is in our future in a future episode. But
I'm sure.
Today,
it's always helpful to have that, other brain or set of eyes, or doing that branding workshop, because not everybody is wordy. Like, I will self-admit I am a numbers person, not a words person. Like, I don't want to have to try to tap into a creative word part of my brain that doesn't exist to brand. Like, that's why I hire that professional to do that.
And that's why we hire you.
Good to have those, to have those other eyes.
Yeah.
Well, no, so true. So this is where I think my segue fits right here. Here it is. Okay. Richard said Forest for the Trees, that's why you change your branding, or why you set your branding so people understand it. I've run into this similarly with bookkeeping. Okay. And I think this can segue into some of our, talks about, financial reports. But there are times where I sit down with clients, talk about marketing. It's just like, okay, what's your budget? And they go, well, I've got this much in my bank account. And I'm like, oh no. Is that, and then it's like, follow up, is that how you treat all of your marketing? It's like, well, yeah, the radio station will call me, or like the local sports team, or there's an event looking for sponsors, and I'll just look to see if I got the money in my bank account. And I'm just like, oh my gosh, no, that money may already be accounted for something. You just don't know it, because you're just, bank account, what's it called? Bank account economics, or bank account budgeting, or something. I forget the exact term. And it just scares me, totally scares me.
I'm dying right now, so I don't know what the inside of me is like.
Yeah,
I know this is how it happens, but yes.
We call it like random acts of marketing when businesses act that way. People act that way, where it's like they haven't budgeted ahead of time. They don't know what they're spending per year, or they don't look at their, P&Ls, balance sheets, and more importantly, cash flow statements, to see how much do I need to just stay open, and so, whenever we work with clients, we always ask them, do you have a bookkeeper? Are you working with an accountant at tax period? And more importantly, is that bookkeeper side. Which I know is music to your ears, Brigitte, but
absolutely. Well, and just like I'm not a words person, not everybody's a numbers person. And
I'm raising my hand. I'm not.
Unfortunately, sometimes it takes business owners getting into a little bit of money issues to realize, like, hey, maybe we should pay more attention to that. And I want to encourage and help all business owners to pay attention a little bit earlier. And if it isn't your jam, completely understandable, completely fine. But there are great people out there like me that recognize that, and we don't judge you for it. Like, we just want to help. Yeah. Like, that's what we're here for. So I know a lot will be like, oh, I don't even want to talk about numbers, but they are.
Well, no, I'm glad you exist, because I didn't have to do it anymore. So thank you, Brigitte. So if anybody doesn't know this already through past episodes, Brigitte's my bookkeeper. Oh my God. Thank you. Thank you so much. Holy cow. But you said something in there about like getting to it earlier. Like, what do you mean by that?
Because I feel like often they try to just make do as they're starting, which honestly, as a new business, it's so easy to get into that, right? Your focus is on, how do I build my business to have revenue coming in so I can actually pay my bills? Mm-hmm. And so in a way, they're focusing on money, but they aren't focusing on it enough to know even a budget for their business, or they're not putting it into a software that gives them financial reports. Like a lot will just be like, oh, we use our bank statement, like you were saying. So as long as the money's there, we're fine.
Yeah, no, that makes sense. When businesses first start, I mean, we're all in that bootstrap mindset. I mean, we talked about this a few episodes ago. It's like, I think it was in the should I hire or shouldn't I? I mean, we focused on tasks, but there is a whole other money side of it. Where we wear all the hats when we start, whether it be birdhouses or podcasts or bookkeeping or something, like we wear everything. So got to build our own website at first, got to do our own bookkeeping, got to manage our own bank accounts, gotta do our own sales, all that stuff. And over time it just builds up, man. And you get into the groove, I think, is it, you get into the groove and you just go with it because of inertia. And what I'm hearing you saying is like, no, it's okay to let that needle skip and like go figure the better part out. Let's pick it up and do something different.
Absolutely. Or you get like in the client meeting I was having today, while they ended up with somebody who did a number negatively on their books, it was 18 months in and they were like, oh no, like we want to get loans to grow. We want to get grants to grow. And they don't have the financial records to do that. And so the banks or the grant agencies are going, sorry, you got to get your stuff in order. So now they're trying to backtrack 18 months to build these records. Ooh. And I think there's also a misconception that you can't afford it early. And honestly, if you find a great bookkeeper, my firm does it. We do setups for new businesses. We give you the tools. And then if you can't afford us on a monthly, you're on your, we give you the tools to do it yourself, to get by, and then come back to us when you're ready, to take the leap into outsourcing that. But at least take the step to get yourself established so that you're not like that and you can understand your numbers and get the loans or the grants or whatever comes your way.
I would also say that we might know that these reports exist. For example, I'm using QuickBooks and I see the reports, but I can't probably tell you coherently what they really mean. So I would say there's probably folks out there who could use tell me like I'm 4 what the cash flow report means, because
it's my favorite.
We are words and spoken word people and not numbers. And it's your favorite. Yes. Good. So that means you're going to be able to tell us what that means. But I would say that, and I know another friend who I think is hesitant. She has an idea for a business, but she's hesitant because she knows she doesn't do any of this stuff. You think I don't, she doesn't. So boy, this is so important to have someone like you to define these things.
Absolutely. And like I said, I think a lot when you're starting out is cost driven, because when you're trying to build a business or start a business, making sure that you have money to pay your bills is your first priority. Mm-hmm. And even the thought of trying to have another professional, eating from that money.
Yeah. There might even be an ego issue a little bit. The mindset flip is like, if you think of it as an investment into saving your time and reducing future risk, I mean, that's easy. I mean, for us, paying for bookkeeping is like 5% of our costs. Like it's tiny, I mean, that's almost nothing. So if you start with that earlier, it's easier to keep it as you grow because you've understood that investment over time and you see that value. So that's like number one, I'd say. The second is like an ego play. I mean, especially when you're new, one can be self-conscious, I think, about, am I successful enough for people to even look at my books? Do I want them to see how much I'm making and how much I'm spending on certain things? That's embarrassing. It's like, I mean, that's, I hate to say that's something to just get over. It's real. It's not something to just get over. It is real. And it's common to have those kinds of feelings. It's just professional bookkeepers, they don't care what you're spending on, really. That's like, whatever, you're doing your business. You're doing the best you can. They're there as a resource. I mean, I would say, at least Brigitte has been for us, a resource to help us just understand how we can do certain things better. But there's no judgment. There's no judgment on anything. It's like, bookkeepers, just and Bridget, back me up on this or not. Just want to make sure that the numbers are right so that you can make better decisions.
Absolutely. Because I mean, the clients that I have, we take their profit and loss report alone, and the amount of data, that comes out of that. I sit in client meetings going, hey, here's your overhead. Here's your profit margin that we're finding from these reports. Raise your prices. You are worth more. And so that added value of somebody helping you deep dive into those reports, or even knowing what the reports say for yourself. Let's say you don't have somebody doing that. Being able to understand that report and go, I need to raise my prices, ends up building your business faster. The P&L alone, it tells a whole story about what's going on with your business. And then if you couple that to use the P&L, the balance sheet, and the statement of cash flows, to me, those are your top 3 statements. Use those 3 together and you have all the information you need to make, good business decisions.
Can you just give a line or two about what each one of those is supposed to do?
Sure. Dan, you want to take your stab? I know you love.
Do I want to take my stab? No,
I know
I'm just
you
a
love
nerd.
financial
You're the expert.
Statements.
No. Here's what I'll do. I'll provide color commentary. I'll provide a little bit of a commentary about the reports and how I've used them with clients on a marketing end after you've described what they're all about. Sure.
Okay. 1 to 2 lines. Ooh, I could go for hours on financial statements. So your profit and loss is ultimately if you do it on a monthly, it is your monthly snapshot of the money that has come into your business. So sales revenue or whatever your income is, and all of the expenses that have gone out of your business, with the exception of owner distribution. So if you are taking money out, no, it's not on that report. Your end number, your net income on that profit and loss, is essentially what is left over after everything has been paid.
Okay.
That number can then be used for, how much can I afford to pay myself? Yes. How much can I afford to put into marketing? How much can I afford to invest into this new tool or whatever it is? That number is what that should be used for. It also should be used for estimating your quarterly taxes for those of you that are LLCs.
Yep.
Go ahead, Dan.
Cool. Yeah. So we income statement, also known as or P&L, profit and loss, also known as an income statement, all the same. We definitely use it that exact way with our clients. So in particular, we've got some e-commerce clients. They hold inventory or it's perishable, so not truly, but anyway. But what we do is we figure out, things like what's their gross margin and or net margin on sales. So we understand our certain costs, certain variable costs like marketing spend, shipping, et cetera. What percentage of profit are they taking away? And it helps us better tweak and understand pricing and pricing models of certain products, et cetera. Also, whether or not we should start looking at new suppliers of packaging material, because costs have shot up, and now instead of 5% of fulfillment, they're now like 15% of fulfillment. So it's like, okay, we need to renegotiate something. It's off. We've also used them to understand cost of acquisition to see if marketing is holding on track with what we projected and forecasted, to see if things need to be more efficient, or if is it another signal that things have changed in the marketplace. And then lastly, budgeting. Yeah, P&L, we'll use it for budgeting. Cost of acquisition is a big one that drives how we do marketing budgeting. Because if you know how much it costs to acquire a client, you can use that to literally calculate your next year's budget or next quarter's or whatever it is. So yeah, we'll use a P&L, and those are just some of the ways that we'll use a P&L statement or income statement.
Yeah. That's a great way to see when expenses are changing or you're spending a lot more in certain areas. It's the daddy of reports to do that.
So that's P&L. What's the next one?
So your net income from your P&L actually feeds into other reports. If we go to the balance sheet is great for knowing what assets your company holds on to. So that can be cash, that can be equipment. I'm trying to think of other really great examples, but those are the two that really come to mind for assets.
Sure.
It also then lists out any liabilities that your company has. So if you use a credit card and you carry a balance, or it has a balance on it at the end of a month, it will be listed on that liability portion, meaning that you still owe that. It will also list out any accounts payable if you view that report in what's called an accrual accounting format. So if you put in purchase orders or bills, it will automatically tell you that that's still money owed. If you have loans, it's going to tell you that under the liability section. And then the last part of that is your owner's equity. And that section will tell you anything that's called retained earnings. So that's carryover from every year. Each year it closes out into that. It'll tell you what you have put into the business. So an owner contribution. It'll tell you what you've taken out, which is an owner distribution. So anything you're paying to yourself, if you're an LLC, will show up on the balance sheet. And then it will also tell you that's where your net income comes into play. So you really want to make sure that your assets and that net income are looking a lot better versus your liabilities, unless you have a reasonable liability. But that is a great way to know kind of the health, the financial position of your business.
All right. And there was a third one, wasn't there?
Yeah, cash flow statement.
That's the one.
The most ignored report.
This is the most ignored one.
Most
and it's
ignored.
It really is the most ignored one. And it is.
You want to know why?
Yes.
You could do it. Yeah, why?
It is the most ignored report because it is the hardest report to understand.
Oh, I don't know. The other two were kind of hard too. Just kidding. Why is it harder to understand?
I would say it's hard to wrap your brain around what is happening within the report. It really takes probably a great explanation of it and explaining it almost in Monopoly money. What is happening within the report.
Mm-hmm.
Yeah, the way I understand it is it's like the difference, or it's the change in money from the end of a previous time period or the beginning of a time period to the end of that time period. So it's like, I guess the balance sheet comes into play on this, right? No, it's the income statement, or it's the balance sheet. Yeah.
Your net income comes into play.
Yeah. So it's how have things changed, oh God, it's so hard to describe. This is rough over audio. It's just like, where's my visuals? Where are my visuals?
I need my
to
whiteboard.
Explain it. Yeah, exactly.
You were a radio guy, Dan. Paint the picture.
I know, right?
Theater of the mind.
I mean, really, it breaks down the inflow of cash into your business and the outflow of cash from your business.
Okay.
And what the very bottom of this report should tell you is where you started. So from that period. So let's say you ran it for the year, where you started the year with cash, what you've used or brought in cash. So it's either going to be a positive or negative, and where you're ending with cash. And so if you constantly have an upside down cash flow statement, which means you have more cash going out than coming in, that is a first sign of potential cash flow issues. And you should dive into why it's kind of that upside down. I do see a lot of businesses get like fake secure, I guess you could call it, because if they have investors or they have loans, that is money going in, but it is still a liability. So it does break down on this cash flow statement, but it's just knowing how to read it to know if you are in a like a good cash flow situation. Because like they say, cash is king.
Mm-hmm.
And it's what makes or breaks a business.
No, that's a really good point. So say you got a loan, $100,000, $1 million on your P&L, that's going to show as 100,000 million inflow. Okay. But you're not going to see the liability that you owe $1 million on your P&L. Okay. Potentially it's that way, unless it's an owner investment loan, whatever. Anyway,
well, but it wouldn't show up on your P&L. Your balance sheet.
It'll show up on the balance sheet.
Yeah.
This is why we have Brigitte. So it shows up on the balance sheet. But what doesn't show up on the balance sheet or in your P&L per se or whatever is, the P&L shows like your cash on, how much you have left. It might look really good, but your cash flow statement is going to show like you're making a payment on that loan plus any other expenses. So if it's constantly negative, you're just going to burn through it, and you haven't actually used it to grow the business in a substantial way. So the way, like, I don't really consult on cash flow management, et cetera. But one way, I've got some colleagues that do management consulting, and one of the things that they look at is health of the business, and the cash flow shows them that. It's how much, maybe this term is familiar to listeners, but the runway, how much runway is left for a business. And that's basically how long can they operate with the cash on hand and their current burn rate. So if their cash flow is negative, that's a burn rate. How much are they burning every month, and how much cash is on hand? If you divide those two, you pretty much get a sense of, I mean, that's simple, but you can divide and see how many months or weeks they have left to even operate. Because many businesses, even if they grow quickly, they die. There's a lot of businesses that have grown super fast, and you see it in the news, and it's just like, oh my God, they blew up with so many users and all of this. But sometimes those businesses have a lag before they actually get profit. And so they're burning through all this money to grow very quickly, but they're not realizing more profit because they either have free trials or just the way the systems are set up, they get paid later on than immediately. And so they've hired all these employees. They brought on new technology. They've scaled servers, or they've opened up shops all over the place. They got to pay for all of that. And they got to pay for it every month. And so they're burning through money. And if you don't pay attention to your cash flow, you could burn through it faster than you're actually making it, and therefore have to close your shop or fire employees and go back to being a one-person shop or whatever because you didn't pay attention to your burn rate.
Yeah, and it draws attention to, when you brought up, not getting paid, till later, timely. It draws attention to those accounts receivable. Which means if you have invoices outstanding that you aren't getting paid on, within your time frame, you may have already spent that money, but you're still waiting for that person to pay you, which can cause a cash flow issue, which is why it's really important to kind of watch, even your accounts receivable time period of where everything's outstanding and how long it's outstanding for.
I think you've defined those nicely, and then Dan did add color to how you might apply those practical applications. I suppose as we close, maybe this is a practical question, maybe it's not. If there was one single thing that people should understand about these reports, Brigitte, what would you say it is?
Ooh. My first instinct is the data going in is only as good as the data coming out in these reports. So while you can, you can learn these reports and you can understand what they mean, if you don't have good data going in, you won't have useful data, being reported on these. So that is super important to make sure that you are doing proper bookkeeping.
Right. I was just going to say, so in essence, that means make sure you're doing everything correctly and you know what you're inputting.
Correct. Yes.
All right. Anything you want to add to that, Mr. Practical?
Oh my God. I would just say it's just so true. Like, if you're running these reports, Brigitte, if you're running these reports to make decisions, you just want to make sure they're accurate, And so if some of the numbers are wrong, or they're just categorized wrong, or, you haven't paid attention to certain elements in the bookkeeping and broken things out correctly, your cost of goods sold may be too low, too high, or, other expenses may just be in the wrong place. And you're making business decisions on inaccurate data, which just leads to bad outcomes. So being accurate matters.
If there's anything that scares the hell out of me, it's the notion that there could be something wrong in there, and I don't know what it is. And not being a numbers person, that's frightening. So you want to be working with somebody who knows this stuff.
And if you really want to deep dive into, what these reports really mean, or how to, read them or understand them, YouTube is a beautiful, a beautiful resource.
I was going to say they should reach out to you, Brigitte, and ask for a free consultation. But if you want to send them to YouTube, go for it.
Well,
they should reach out to me. However, it is an easy thing as you're just sitting somewhere to be like, what does this actually mean?
I mean, yeah.
so I would say, I understand that that point of view that YouTube is great. Let me just tell you a short story. I've got a sprinkler head out front that I can't figure out how to change the range on. So I go to YouTube and it doesn't do it the way they say. So here's what I would say. Get an expert. All right. When you're playing around with your reports, get an expert.
What you're saying is don't trust YouTube. Trust Brigitte. There you go.
I think
that's what you're saying.
I'm on YouTube just as much as the next guy, but I would say it might not be the solution. So there is a reason to talk to someone like Brigitte, I would say.
Well, at the end of the day, your benefit out of somebody physically reviewing your reports, your business, and talking to you about it is going to add way more value than what you're ever going to get out of a generic video. Yes.
That's true. But it could give you a base of knowledge.
It could.
To start.
It's better than nothing.
Absolutely. All right. How about you? What practical applications for your financial reports have you run into? Maybe you'd like to share that with us, and we may just share that on a future episode. So scroll down in the show notes and share that with us. Contact information there and more, including info on all three of us. So thanks for engaging with us, and we'll be back before you know it with another WTB. Thanks, everybody.